Hello, and welcome to the Bitcoin Butlers Podcast. I am Mike Watkins, and with me, as always, is my good friend and business partner, Matt Burke.
Hello.
And each week, we try and bring you an intellectually honest discussion about news and events affecting Bitcoin. If you like our content, please like, subscribe, and share. So, Matt, I think it's been a couple of months, maybe November, since we did our last show.
It's been too long.
It has been too long, but to be honest, there hasn't been a ton of news or events really happening in Bitcoin. And something that we discussed briefly before we started this was just that when Bitcoin is a type of asset that you don't have to worry about on a day-to-day, month-to-month, kind of year-to-year basis, that when you invest in something like a stock, or when I was investing in stocks, I would have to keep up with what the companies were doing. You would have to keep up with the news about their products. You would have to think about how that product lineup did with the competition that was out there. This is before their financials are out. Then when earnings season is out, or you're gonna have 4 earnings reports per year.
Mm-hmm.
You've got financials you have to go through. You have to read their outlook, depending on how much that stock you have. You may want to get on the conference call or not. But the point was that it was like a job keeping up with the big thing I followed, as we've talked about before, is Apple. And I knew everything about Apple. Just, there was very little information that got out there that I didn't consume. But every time earnings came out, it was like a terrifying day. I'm like, oh no, it's earnings day, and I don't know what's going to happen. And there were times where a lot of times Apple would report, and they would have what I thought was great news, and the stock tanks, like 7% after hours.
Right.
But with Bitcoin, it's a little bit different because it's not affected really by these. I'm going to call them microeconomic factors.
It's microeconomic factors, but it's also, in the case of companies that are run by management teams and that have public investors, there's this idea that there's kind of a tail wagging the dog situation going on there, where so much of what these companies are doing are focused on how Wall Street perceives it. And so there's a lot more kind of hype around all of the information. With Bitcoin, the news can affect the price of it, but it's not like there's a company running underneath it that's affecting all of these things. It's just kind of doing its own thing, and putting down blocks every 10 minutes and acting as a store of value for a lot of people. And there's nothing coming out of the actual entity where there would be with a stock.
Right. I think that's a great point. Do they call that management risk? Is that what it's called, where you have to be concerned that the management of the company is going to mess up the company?
Yes.
And so Bitcoin doesn't really have any management risk per se. You don't, when you're buying Bitcoin, you're not buying, Apple, Google, etc. You're really buying a commodity.
Right. You're buying a bearer asset.
Right. Yeah, the actual underlying Bitcoin never changes. It's not like one Bitcoin represents something more than it ever would, which you would have with a company. Whereas a company grows, each share of stock represents more earnings per share. Right?
That's right. Yeah.
Mm-hmm.
And there's no cash flow associated with Bitcoin. It's just, it is the asset, and 1 Bitcoin equals 1 Bitcoin.
Mm-hmm. I keep wanting to say it's sort of like a set it and forget it type of way of investing. But I can tell you that for me to go through, and of course we keep up with what's going on, I just didn't need to follow it really minute by minute. The type of news coming out was pretty insignificant, which is to be expected. For people to expect that there's always going to be something very exciting on the horizon or big news on the horizon, is a little bit silly because that's just not the way things work, especially
Yeah,
in,
sure.
big macroeconomic way.
Yeah, no, I agree with that. And I think part of it also is when you understand Bitcoin and you become interested in it, you naturally, lowering your time preference is part of that. And so, um, my thought is that, yeah, I want to know what's going on from a market standpoint, not as much as from a platform and innovation standpoint. That's what's really, important to me is what's being built on Bitcoin. Um,
Hmm.
and so my view is generally I'm not going to harp on the news that I hear, and I'm certainly not going to, scroll through Bitcoin Twitter and have that affect
Hmm.
my view of things. I just feel like, my time horizon is long enough where, come talk to me in 5 years and let's see where we are.
Hmm. Well, I like to bring that up. So we've talked about before how we like to go on hikes on Thursday afternoons, and we never know where that conversation is going to go. Sometimes we go deep down a Bitcoin rabbit hole, and sometimes
We
we've
don't
had
mention
we
Bitcoin.
don't mention. I think the past few hikes we haven't mentioned Bitcoin much, but I brought it up one or two hikes ago, and Bitcoin at the time was at like 16,500, and it didn't feel super strong at that level. And I don't want to say that I had doubt as to what was going on. It was just the best way I could describe it was unpleasant. I don't like seeing things that used to be worth, what does Bitcoin drop like, I don't know what the percentage is, but if I said
It was almost
six
70,000.
six
Right.
6x, like I lost like a 6x from, where it was like 69,000.
Yeah.
So I'm a human being. I like to win at things. I don't like to lose. I particularly do not like to lose money or value in anything. That's not the pursuit of an investor. So I was just I didn't like a lot of people holding Bitcoin. It's not so crazy. I didn't like it. I don't like seeing it at 16,500,
Sure.
and I started to reassess personally. What have I done here? Did I make a mistake here? And I think we should all have humility and all be willing to go back to the beginning of any decision we make. So I want to make sure it's clear that this is not something where I started to feel weak about my holdings. I just was trying to be intellectually honest with myself to say, okay, knowing what you know now, what was the correct move to make? What would you do? How does the outlook, look compared to what you thought it was going to look like? Because it's impossible to look back 2, 3 years and say, oh, yeah, I got it all right. I expected things to be here. That's unrealistic. No one can do
Sure.
that. But anyway, so through this exercise, I started to think through it. And I went back to all the things that I understand about it. And my thesis has not changed. It's one of the only things that's really real in this world. And people don't understand. People, as smart as you think these people are, and by these people, you can put in there whatever you want, whatever fits your kind of narrative.
Sure. They're all over the place.
They're all over the place. Lots of geniuses and experts everywhere. But these people just don't understand basic supply and demand. Because I think it's almost just comes down to that. And then we can get into obviously networks and things like that because there's other things to pile on top of it. There are other reasons why Bitcoin may be ushering in the future. But I'm saying just from the concept of supply and demand and stock to flow ratios of gold, it's it's some fairly simple math. And that transitions me, Matt, to I asked you when we were in the woods, like, what do you think? I asked you the same question.
Mm-hmm.
And I'm going to just, instead of repeating your answer, I'll let you share your answer.
To be honest, I don't remember exactly what my answer was, but I'll guess what it was. Was that if I were to go back and kind of reassess my movement of value into Bitcoin, and look at it compared to all of the other alternatives that were available to me at the time or even now, I still think I would land at the same place, that this is an incredible store of value. It is an actual scarce asset of which there are very few in this world. Um, and I really view it as a long-term play where I'm not going to focus on the price day to day. I also think that there are many externalities that nobody, um, had kind of baked into the price that really all happened over the course of this year, most of which really have very little to do with Bitcoin. So when you look at a lot of the things that caused the Bitcoin price to drop last year, um, whether that's, Luna and Terra, Celsius, um, ultimately FTX, all of the Three Arrows Capital, all of those crashes that dragged Bitcoin down really had nothing to do with Bitcoin. They had to do with other assets that tend to get lumped in with Bitcoin but are not Bitcoin.
Mm-hmm.
And
Exactly.
so given that those things happened, and I'm not trying to say coulda, woulda, shoulda, what would have happened, what happened. But I think that, if you want to know why some of the predictions didn't come to fruition, when you look at, rational people saying what they thought Bitcoin was going to do, and by all measures, these were, and I'm not saying calling a specific price is something that anyone's ever going to get right. But I think that without a lot of these outside events, the bloodbath would not have been nearly as bad. And I would say that relative to what actually happened, when you look at FTX and everything that happened prior to that, Bitcoin has done amazingly well. It's really, and I'm not even talking about this last run up over the past
Mm-hmm.
month. I'm just saying
Mm-hmm.
in general, there were plenty of people saying it's going to 5,000. And, I think it kind of held the line really in a respectable way, given everything going on around it.
Yeah, I agree. We
Was that
talk
my
about,
answer at the time, by the way?
no, your answer was more short and sweet at the time. Your answer was, yeah, I thought about it. Nothing's really changed. I'm fine. Like, I like, this is just not, like, I just don't, you really just didn't care.
Yeah.
You didn't care about the price. You, you, it, it was like, yeah, one or two sentences of reassurance. And, and it's not one of those things where, where we're having these deep conversations in the woods, it, they're we're pretty dialed into each other during that conversation. Meaning, I would know if you were just saying it to make me feel better, or if you were saying it just to lie to yourself, right?
Sure.
Like when you said it, it was. That's why it was so impactful, is because it was short and concise and clear and positive,
Yeah. That's,
right? You didn't have anxiety or fear. There was no anxiety or fear on your being at the time,
yeah.
right? And you could, and there are two other things I'd like to mention about this, because it's all part of my I guess we'll call it my personal journey. But I think that a lot of people, probably when Bitcoin was at 16, 15,000, whatever exactly went to, that they had some heartache from it. I mean, there's no shame in that. And maybe other people question. I'm sure a lot of people question, should they be holding on to this, right?
Sure. And I'm sure a
Although,
lot of people didn't hold on to it.
yeah, although we see a lot of people, like the people who really got it, are holding on, and I don't think people understand that either.
Sure.
So I had two other things that happened. One made me feel better, and one was just an honest answer that I gave out. So I was having a discussion with my wife about this, and she wasn't concerned. She said, it's like other things you've done. You get there before everybody else. And that's not to try and be, that doesn't sound boastful, but she was saying, I was really into the UFC
Mm-hmm.
back in, people didn't really, where I was known as the guy that was into the UFC.
Right.
But I thought this was just an amazing sport. I was really kind of fascinated with it. And I saw the the difficulty and the beauty in it. And now it's like on TV every weekend. I barely even watch it anymore.
Sure.
Um, and that was also that's been my belief on Bitcoin. We've discussed it, how early we are, and people at the Bitcoin conferences talking about how early we are. It may not seem like you're that early, but it's really early. It's really early. Most people in the I will call them normies cannot really give you they don't have any kind of clue what Bitcoin really is.
Right.
Right. And the third thing that happened to me was that I was playing poker with my friends, and I think that sometimes there are people that people know that I'm into Bitcoin. I don't talk about Bitcoin at the table, but everyone knows that I'm into Bitcoin.
Sure.
And I've heard people at the game say like, "Oh, I'm really glad I didn't buy Bitcoin at X, right? I'm really glad I didn't buy Bitcoin, And I don't. It's fine. I mean, that's just not a discussion I need to be part of. But somebody asked me a few weeks ago, like, are you still a believer? And my answer was, yeah. Like, nothing's changed. The only thing that changed was it was a temporary price adjustment. It's kind of one of the more insignificant things. I mean, the hash rate is at about an all-time high,
Right.
And we also know how it's marching on and some of the other things that are going on with it. So, do you have anything to add to this kind of weird segment?
No, I think, I'm kind of in the same boat that, since I got into this, I have bought Bitcoin every single week without skipping a week, and sometimes more often than that. And so I think that's pretty much my testament to it, is that, and I'm not saying that, we're not talking huge amounts. I just buy some every
No,
week.
I get it. No, but it's
And
still an action.
yeah, it
which you
happens.
could stop.
I get my notification each week that you stacked,
Mhm.
and and so I have more Bitcoin now than I did a week ago or 2 weeks ago, and that's going to continue. And as long as I'm doing that, I feel like I'm adjusting for some of these price fluctuations, but I'm really, more than anything, proving that conviction that this is something that I want to acquire as much of as I can, and I'm not really going to stop based on what the price is doing.
Mhm. Yeah. And then just one last thing to add to that I think Bitcoiners in general like to be thought of as having a low time preference. Obviously, it's in the book by Saifedean, and that concept, I think, I think a lot of Bitcoiners would think it resonates with them, but in reality, it was really more about being upset about. It was really more about a short time preference activity or a short time preference matter, and that's something that I think that people have a more difficult time understanding with an investment, is that you may just have to sort of wait a bit. That it may you're just gonna have to take some time. You're just gonna think about like a Michael Jordan rookie basketball card, right? Um, and Michael Jordan obviously was a superstar when he was a rookie, but let's just say that you bought this Michael Jordan rookie card, and let's say it cost $200 at the time, whatever, which would be a lot for a baseball card like that.
Basketball.
I'm sorry, basketball. And you say, okay, this is going to be worth a lot of money someday, right? Let's just say that you're a great predictor. You're a great study of basketball, and you just know Michael Jordan's going to be a very, very special player in this league. He's going to be this legendary icon, whatever it is, right? You kind of see it. Maybe you have a dream, a vision, whatever. And you buy this card. Pay $200 for this card, and Michael Jordan's rookie year was like, what, 1983, 84?
Something like that, yeah.
Something like that, right? So, let's just say it's 1983 for easy math. That was 40 years ago, right?
Mm-hmm.
Okay. So you bought that Michael Jordan rookie card, 1983. What year is it worth a lot of money? Is it worth a lot of money in 1993? Let's
Don't
say
know.
in 1993 it's worth 10,000,
Yeah.
right? Great investment. You went from 200 to 10,000. Okay. But your vision for where this thing is going is not 10,000. This is going to be $1 million $1 million basketball card,
Right.
right? I think it's actually probably worth more. But anyway, the point is that the value isn't realized in years 1 through 20. And I'm going to use, for the sake of Bitcoin, because I don't think it's on that horizon, although I think that not enough attention is paid to 20 years out, 30 years out, 40 years out. I think the furthest anyone seems to be going with this right now is a prediction of about 10 years out. And that would give it a stock to flow ratio of 4 times that of gold, right, by 2030. And that's where things start to get weird. I don't know what that means. It's hard to understand where technology is going to be in that year, where people are going to be with CBDCs and some of those other things. But the point is that you have to be on the to me, I'm thinking 2030. Like that is my. And this is not investment advice. This is my own
Sure.
personal
None of it's
thing.
investment advice.
Right? Nothing we say. But when I think of the time horizon for Bitcoin, I think 2030. I have some other markers along the way. I think the next halving is a marker.
Sure.
And I think that next run will be interesting. And then I think that the next halving is that big marker, right? That second halving away. And sort of what do we get a year after that?
Right.
And that's a long time in the world of technology. We're talking about 7 years. But that's sort of where my time horizon is with this. It's very difficult for me to go out further from that.
Yeah, but when you compare that to to traders who have the highest of time preferences and want to try to take profits on a daily basis, it's just a completely different worldview, right? That's there because it's not just that you have a lower time preference outlook on it. It's that, a lot of people are thinking that they're glad that they didn't buy it at, 60,000. But those same people are probably not buying it at 16,000. So
I have a weird theory on that people may like to hear. So when I first really, thought I understood Bitcoin, right? Because I don't know if you ever truly fully understand it. But when I first really thought I had a good grasp on it, and the price was just going up every day, just moving up, up, up. And I was thinking, every person I know is going to be like fully invested in Bitcoin because why wouldn't they be? And they're all just going to jump on board. It's just going to be it's going to be weird because everyone's going to be like so rich, right? That's what I was thinking. I was like, this is just going to be really weird because everyone's just going to do this. This is like really obvious, like I figured it out. I'm going to do it. And everyone else is going to figure it out. And why wouldn't they? Because as the price is running up, people are just going to buy in. That's just what happens. And then you have that big crash. And that big crash, I think, is going to keep like 80% of the people out of it for the next round. Right. Yeah. Right. It's like it washes out a lot of the individual investors and makes room for the institutions. And one of the things we talked about before in Bitcoin is that it's one of the few times that that individuals have front run the institutions. But I think at the end of the day, it'll be likely a smaller group of individuals outran the institutions, but the institutions outran the people, right? The institutions are going to outrun 80%.
They're going to outrun the masses. Yeah, for sure.
Right. They're going to outrun everybody.
Yeah. And I mean, look, when we were first really getting deep into it, and I had discussions with a lot of people, to the point where I really thought that a handful of them were truly kind of orange pilled in the process. Most of them didn't buy Bitcoin. Because at the time I was talking to them, we're probably talking about sometime between March and May of 2021. And that was a big crash. And so as I'm talking to people and it's going from 20 to 30 to 50 to 60. And then as I'm continuing to talk to them, it's dropping back into the 30s. People are like, whoa, this is just too scary. I'm out. I could name several people that, kind of fit into that category where if things had not dropped off at that point, then they might've bought in.
Guaranteed. Yeah.
So
I don't know. Hard to say where it goes, but you either believe in something and you think that you've thought something through and you have some conviction in the type of asset you want to own, whether that's a mountain house or a ski cottage or some land somewhere or a piece of art or a trading card, whatever you'd like to own. If you've thought it through and you have conviction in it, it's the small fluctuations are not that meaningful.
Right. And, like you said, it's helpful to always ask yourself the question again, just to make sure that the underlying principles behind your conviction are still intact.
Yeah, I think it's a great exercise. It can be difficult to not lie to yourself in these situations. You really want to kind of wrestle with making sure that you don't just, you want to be pretty critical of what you did and didn't do. I mean, and I can tell you there are things I would like to have done differently. If I had known what the price was going to be, I would have delayed a significant number of purchases in 2021, and I would have picked it up in December of 2022, right? And had however much more. So, but when you were saying that about because we similar friends and I had similar conversations with people really want to get in as the price was moving up, and then as it started to crash, then just they were in it to get rich.
Yes,
they were in it to make money. They weren't in it for like, what is this thing? Why do you have conviction in this thing? What is this? Why this? All it was just another pony in the race. It didn't matter what it was, right?
Yeah, it was a widget at that point. It wasn't.
Yeah.
And that's an interesting thing too, because I think if I were to go back to a lot of those conversations, and probably the thing that I think conveys my conviction in it the most was I would say to my friends, like, I feel like this is kind of like the ability to buy a piece of the internet in 1995. We're at the point before, we may be right at the point where AOL was starting to send out CD-ROMs to people, to sign up. It's like, we're not there yet. It is so early. And if that's what your conviction is based on, that's a very different investment thesis than how many dollars does it cost me to buy it.
Let's also not, I want to make sure something else is not lost in this discussion, which is that maybe a lot of this discussion has been about belief and conviction and opinion. And that has its own value, but also has its own weaknesses. I'd like to get to a couple of facts, and correct me if I'm wrong on any of these, but Bitcoin is the most powerful computer network in the world, right? It's the most decentralized computer network in the world. It's the most secure computer network in the world.
So I've heard, yeah.
Okay.
As far as I know.
And it's had, like, when was the last time Bitcoin was down? It has like the most uptime of any network in the world.
Since some early bugs, I mean, it's got, the uptime is 99.99 something.
It has higher uptime. It has a it has a higher uptime than Apple, Google, Microsoft, Netflix. What the top FAANG stocks just has an uptime of all of them combined. It's better than all of them combined. Meaning, if you add up
all their downtime, right?
Exactly. And so there are some really tangible assets that are part of the Bitcoin network. So the Bitcoin software, having that kind of uptime,
Mhm.
is incredible. It's like one of the most reliable, if not the most reliable piece of software that we know of. It's very simple what it does, but it does it really, really, really well,
Yeah,
right?
sure.
And and so there are a number of facts, there are a number of really tangible things that are also part of the Bitcoin story. All of the miners, which is, we're going to get into a story about that tonight because I think
Mhm.
there's been a really significant story in the world of mining. But you've got this giant network of computers supporting it, and the Bitcoin protocol itself incentivizes them to do it. This isn't a guy, these miners are not people in their basement that are
Right.
buying some machines. Those guys have a tough time competing, and people can do that. We know people that do that. But when you think of Bitcoin miners, these are usually either publicly traded or sort of like, large institutionally
Well,
funded
yeah, very well
operations,
capitalized. Yeah.
very well capitalized, right?
Yeah.
This is big, big institutional money because here's why. They say, okay, if we take $100 million, I'm just going to make up a number. We take $100
Mhm.
million to capitalize this Bitcoin mining farm. It is going to produce for us a return of, and I'm just going to make the math easy. In its lifespan, it's going to produce a capital return to us of, let's say, 125 million.
Mhm.
I think it's probably more than that, but let's just say 125 million. Well, if, and let's say that's going to happen over a period of 3 years because we have to just make things kind of reasonable, right? Give the machines a 3-year lifespan or
Sure.
so. And I think my math is being pretty conservative. But basically, if you tell this big institutional money that you give me 100 million, and I'm going to show you I don't want to say bulletproof because nothing's bulletproof, but an almost bulletproof way to
Oh,
get
right.
to
If
125
you
million.
look at mining where it is right now, there are a lot of challenges as well. So obviously, if you invested in a mining company a year and a half ago, you're not very happy with that investment. But there's also, again, many external factors, energy prices, uh, just all of that, all of the ability for miners to be profitable has come under some stress, and you've seen the
Sure.
cost of the equipment drop, all of that. So to be honest, to be intellectually fair, it's mining is by no means a slam dunk,
Oh,
and
no.
and we just saw Core Scientific go bankrupt. I mean, there's
Mhm.
there's real problems in the mining world when it comes to these large operations. But to your point, I think that you're basically talking about raising money for capex that is going to create a return. There's going to be a relatively short payback time, and
Mhm.
then you're literally printing money.
Right. And to be clear, what I meant by some of that is that they don't have this like big managerial risk or like product execution risk or like market share type risk. They just know if they they basically put a whole bunch of machines in a cooled warehouse, right? Supply it
Right.
with the cheapest electricity possible, and how many people work at a typical like a large Bitcoin farm? Like, let's say a Bitcoin, what would a large operation have? Like 10,000 units?
Maybe. Yeah, I don't know.
Let's say 10,000 units,
Yeah.
right? How many employees do you need to run 10,000 Bitcoin miners?
I mean, less per square foot than you know
Right. I mean,
most other operations.
could you run that operation with 5 engineers? Possibly. I mean, there's a way to find out, but
Yeah.
the point is that you don't have a very large labor cost when you're running these miners, right? You're buying machines and plugging them in the wall.
Hmm.
That's the business. And obviously there are risks to be factored in because the price does fluctuate, energy costs can fluctuate. There are things there. So, um, but I think more often than not they have made money on this pursuit.
Yeah. By the way, I did look at this. I think Marathon, as of a little over a year ago, had like almost 200,000 ASICs.
200,000 computers. Is that one
100,
spot?
199,000 is what it said.
Is that in one spot?
I'm not sure.
Okay. So I think if just to kind of put a summary on that, and then I'd like to see what else you have on it, is that the first part of the conversation was sort of about belief in what Bitcoin was, and understanding of what Bitcoin is, not just belief. It's understanding what type of asset it is. But judgment of an asset is subjective, and we
Sure.
need to realize that. But it's just that so it is judgment of an asset. But then if you get to some of the facts, you realize that Bitcoin is really almost like I don't know, I'm just floating this theory here. Like we talk about the FAANG stocks.
Mm-hmm.
Well, maybe Bitcoin is like a FAANG stock. Well, I think it is, actually. I think it's
In what
very
sense?
much like a FAANG stock. So to me, most of the companies in the FAANG group all had some way where you could not beat them, where they were just clearly the best at what they did. So
Mm-hmm.
Apple was the best at the phone. Google was the best at search and advertising. Facebook was the best at social media, right?
Mm-hmm.
So when you think about a monetary network, if I were to ask you, what is the best monetary network in the world and why? What would your answer be?
Bitcoin.
Okay, so why?
Well, because of all the reasons we were just talking about. It's decentralized. It works. It's an incredibly powerful network. There's incentives built into it to keep it going, and to secure it. So all of those things make it, fairly unbreakable.
Yeah, it's not even close to second place,
Mhm.
right? And then it'd be very difficult for someone like let's just say an Apple, a very powerful company, to come along and say, okay, we're going to have our token and our financial network. Well, I don't care. Apple's financial network is never going to be as reliable, robust, and secure and free and able to audit as Bitcoin.
Right.
And you're also not going to have decentralized players all over the world running computers to keep it alive. And if Apple at any time wants to come along and shut it down, they can.
Mm-hmm.
So I'm saying, if you say, how important of a piece of technology is a monetary network, so like Swift network, right?
Mm-hmm.
How important is that technology in the digital world? And of course, it's like one of the keys to civilization, right?
Absolutely.
To commerce. So when you compare when you compare Bitcoin's dominance as a technology in the tech world, I would put it in that category of those monopolistic companies.
Sure, I understand.
Where it
Yeah.
makes it almost impossible for someone else to compete. And so that in and of itself has some value. So if you think about it, Google has a market, Bitcoin has a market cap of about 400 billion-ish right now, 440, I don't know,
Mm-hmm.
somewhere in that range. Well, if you thought about Bitcoin as being like this weird decentralized like tech giant, and it has a value, then its monetary network and balance sheet in some ways have a value of 400 and or so billion, 440
Mm-hmm.
billion, right? And that would sort of be, I think it's a fairly good valuation in some ways. If I was comparing it to a tech company, I would actually argue maybe, I'm biased, I'll always say it's worth more, but I'm saying that
Well,
if you,
but you also have to realize that you say you're biased and that you think it's worth more, but the reality is that there are a lot of assets that can get sucked into Bitcoin, over time. And I'm not just talking about digital assets,
Mhm.
but I mean, I think that, and it's not going to be like, it's not realistic to say, okay, Bitcoin is going to absorb, hundreds of trillions of dollars of value anytime in the immediate future. That's just not realistic. But when you look at where value is stored, and if you look at modest departures from those stores of value into Bitcoin, it's the upside is absolutely there. And what you're talking about doesn't reflect any of that. That just reflects where it is right now, without those assets, having been transferred into Bitcoin. I mean, when you're going to see precious metals and other digital assets and real estate and bonds, all of those assets are going to some extent convert into Bitcoin over time as the demand for Bitcoin grows and its use as a store of value is demonstrated.
Mhm. That's actually one of my valuation models on Bitcoin is what percent of each of these other asset classes are going to come over. And if you just have 1 or 2% of each asset class come over, I forgot what it was. I think Bitcoin's at least like 250,000 a coin, something like
Right.
that.
Yeah.
Maybe more. I think it may have been higher. I'm not sure.
But yeah, those types of things. I mean, the when you look at small amounts of value, I mean, even from like a corporate treasury standpoint, if there's that same model that says if just a few percent of the S&P's balance sheet, cash reserves were to go into Bitcoin, what would that do? And it's a similar type of outcome. So there's all these things that we're not saying they're going to happen, or and there's not, and it isn't happening at the moment. But when you think through rationally what Bitcoin is and where it's headed, some of that I think is inevitable.
Okay. I have this other thought in the everything is good for Bitcoin category. And I don't know if we've talked about this before, but I think we did. And that is the impact of FTX and I'm going to call it the altcoin meltdown, because it wasn't just FTX. And I can't even list all the companies, 3 Arrows, Celsius, FTX. The list just goes on. All these altcoin casinos, shitcoin casinos. They completely melted down at the end of 2022 to the point where one of the biggest in the world, FTX, who was doing, Super Bowl commercials with Tom Brady and Larry David. I mean, you're just talking about they couldn't be more apart. They sort of were the face of crypto for the American culture in some ways, right?
Sure.
They were the biggest brand. I don't
Huge
necessarily
brand.
know they had the most users, but they were the most audacious with their marketing, right? And they got huge celebrities. They got people invested.
They named an arena.
Yeah,
all
they
that.
did all this kind of stuff, right? Crazy prices paid for everything. And the CEO was this like 33-year-old, kind of eccentric, super genius who just turned out to be basically a crook, allegedly.
Yeah.
And part of that means that a lot of people's understanding of crypto got realigned, because people have been talking forever that during the Bitcoin conference in Miami, there's an altcoin conference, and they call the altcoin conference the shitcoin conference.
Right.
So people knew that with 20,000 of these things out there, obviously.
The people that go to it call it that.
Right. That's the actual name of the conference, right?
Yeah.
And so people always knew these. People would just, like openly make fun of some of the silliness. Like, okay, this coin's got 1,000% interest a year, right? Like that could ever be real. Like someone with any kind of intelligence or risk analysis would be fooled by that. I'm not saying that people are saying, look, I know this is kind of BS, but these are my odds. This is my risk and reward. This is my outcome. There are ways to play that, but to have conviction of it is something different. And everyone knew this crash was coming, and everyone said all these things are going to go to zero. And then it starts to happen, and people act surprised.
Right.
But here's my kind of thinking on it, is that there's going to be a push now to like crack down on crypto, as there should be. I guess in some ways, I don't want to get into like, do I really think the government should do it? But they're really going to do this, right? And it's going to be an easy thing, and they're going to, they're going to probably mark them all as securities, which there's
Right.
some
Which
argument about.
I think that's maybe a better way of putting it. Is that you can be generally against regulation or over regulation, but you also have to live in the real world, and it's really difficult to take a position that stocks and other financial securities should be governed by the SEC, but all of these tokens should not. All of these
Exactly.
crypto tokens. And so you can't. So while I would be, I could have I could have an argument against pretty much any government regulation. The reality is that some of it is good for consumers who don't know better, and some of it is to prevent really bad things from happening to the financial system. But what I'm not okay with is saying, well, this should be regulated for this reason, and this thing over here that looks and acts the same way should not, because we can't, because the government's too lazy or incompetent to figure out what to do with it. So I think that's where we need to get with that for sure, so that there is that playing field is kind of leveled from the standpoint of these altcoins, but that also goes along with recognizing that Bitcoin is something different.
That's my thinking here.
That's the punchline.
Right? That's the punchline. Right? They're probably going to list all of the altcoins as securities, which means it's basically going to shut them down. People will probably find some creative way to get around it, but it basically is going to be like these things we're going to go after, and they're going to go after 20,000 of them, right? And they can say they go after 20,000, but what's going to come out of that process is the understanding that Bitcoin is different. And so it's sort of this like jujitsu move or magician move where people are looking at the 20,000 that are being cracked down on, and then the one separates itself from that. And gets proven to be a more real asset. And another thing that happened with the FTX collapse, which I think was good for Bitcoin, bad for people, was that people left their Bitcoin on the exchange.
Yeah.
And we saw a lot of things talking about storage all of a sudden. And I think that, I think anytime there's a sort of a tragedy that gets into the public consciousness, that people look to the survivors or the way to have avoided that. So it's like sort of like, someone that has a house near a beach builds their house out of concrete, right? And all the other houses get blown away by the hurricane. This one stands up. Then the next time they do those houses, most of the houses will be concrete,
Sure.
because that's just the way people think. So I think that's what might be happening here with Bitcoin.
Yeah, I think there's some of that. I also think, and that's being definitely reflected in the private equity markets. I think there was so much appetite to invest in all of these different token projects, and you could go out and raise money on a PowerPoint deck that just said, we're going to raise this money, we're going to pay you this yield, and and by the time anyone's worried about where the rest of the money's coming from, they've made their money back and then some. So that's what was going on, and I think that this shook out a lot of those investors too, because now they're like, wait a second, we're not going to sign up for these token offerings that could easily just go sideways with no notice. I think that and we talked about this, I think probably on our last one, or whenever we talked about FTX, that you had serious private equity money invested in FTX with seemingly very little due diligence, or definitely not very good due diligence. And so I think that you're going to see less money flowing into some of those altcoin assets, and you're going to see, more investment going into things being built on top of Bitcoin.
Yeah, I think that's a great point. That the VCs were making so much money off these altcoins because they were getting all these pre-mines and things. It's like, hey, would you like
Right.
to, spend 10 million or put 10 million in this project, and you're going to have, when we release our coins, 100 million worth of this fake just coin, whatever you want to call it, and we're going to have a market for it, and you're going to make a ton of money, and it's just basically like printing money. And I think they
Yeah.
funded just tons and tons and tons of these, right? Help them create a slick website, et cetera, et cetera. And I think the VCs did great in the altcoin market. And now it looks like that run is. I don't follow very much, but I could argue that run is going to come to an end. I think it's going to be hard to justify some of these things after you have this like in your face epic collapse of
Oh no, I know
FTX.
that's happening, and
Right.
I know of projects that have been impacted by this because they might have been counting on investments coming from folks who had an appetite to do this type of
Mm-hmm.
project, and now all this happens. Plus, a lot of these folks lost a fair amount of their investable capital because they were invested in a lot of these
Mm-hmm.
questionable assets.
Yeah, so I think that hypothetically speaking, let's just say that the FTX collapse was essentially the collapse of the altcoin market. And I'm not saying it was, I'm just saying for the sake of argument, one could argue it might be. I think time will tell.
It was a collapse of the
It was,
altcoin
yeah, yeah,
market. It may not
yeah.
be the collapse of it, but yeah.
Correct. It was a very very damaging blow, a very damaging blow, and enough of a blow that serious people can never take it seriously.
Hmm.
And you also had a lot of people lose a lot of money, and it was fraud, and it was just like, this is just, the characters involved were crazy. But um, the question is, everyone knew Bitcoin was going to take a shot when the shitcoin market collapsed. So one of the questions you can ask yourself is, if this was the collapse of that market, um, how did Bitcoin hold up to what, in relation to what you thought might happen or you feared might happen? And I don't have the answer to that. It's just more of a way of looking at it.
Yeah. Well,
Because,
I said earlier, I think it's
right.
held up pretty well. I think it's
Yeah,
held up.
yeah, for
You know,
sure. And I think that is, the F. I don't know if you could. Do you consider the FTX collapse a black swan event, or?
you know, I think that's also can be a subjective term. It was a significant event that was not really it was not anticipated in terms of what the market was expecting. Um, so I don't know exactly what the definition of what qualifies it to be a black swan event, but I would say it is a large unexpected event with serious consequences.
Okay, so if we reverse out a little bit and say, okay, starting with the Luna collapse,
Hmm.
and then Three Arrows Capital and Celsius, and who am I forgetting?
Um, Terra Luna, Three Arrows, FTX, Celsius, Voyager.
Voyager. Okay. But add all those collapses together and tell me how much of a collapse that is for the altcoin market.
It's
That's
big.
big. I mean, it's almost like, I don't know. To me, that's I don't know how it plays out, but I could argue that's a fatal blow.
Hmm. It could have
You know,
been, yes.
yeah, it could have been a fatal blow. So, and with that, like what you said, which is a really great point, um, was that, well, now more effort will be paid. Okay, well, that was a chapter, right?
Hmm.
And now the next chapter is Bitcoin and what you can build on top of Bitcoin, which is, there's some other applications being built on top of Bitcoin that are pretty
Yeah,
cool.
and it's funny because I think in the past, maybe just in the past week or two, I've seen, there've been some people, I think Brian Armstrong was one in particular, CEO of Coinbase, that took the .eth off of his Twitter handle, and is all of a sudden now, more Bitcoin focused. I thought that was an interesting little just tidbit of that. I think there's some people that are maybe trying to reorient themselves
So
in
you're
that market.
telling me, okay, so right. So let's just take the CEO of the largest US exchange, and one that is publicly traded, and people may hate on Coinbase, but so far they've been a good actor. You may not like some of the fees and this and that, but I think Coinbase has really been a good actor. They're publicly traded. I think it's good for Bitcoin. I think it's very good for Bitcoin. And so the CEO of that company removing the Ether thing from his social media, that's significant. People don't just adjust that willy-nilly. It
Right.
has, especially when you're a very highly visible person. He knows that will be seen by the world and discussed. Right?
Yeah.
To what extent he wants that to be done, I don't know. I'm just saying that it's meaningful what's up there. There's also this app. You've heard of this app? I'm sure you have. Nostr.
Yeah. Yeah. It's like a decentralized Twitter kind of, or social media
It's
platform.
more than that. Yeah,
I haven't used it. I don't really know.
I haven't played around with it. I went to it one time when I first heard about it, and the user interface was just like, this is way too early for me. I'm not this kind of guy.
Yeah.
And then I went to it today. I played around with it today. I got a private key from it today, and I didn't really get too deep in anything. I wasn't devoting a lot of time to it. I was just kind of poking around, and it looks like the idea that these are apps built on top of Bitcoin. So for their apps running on Bitcoin. And I'm probably going to listen back to this and regret how I'm describing this, but it gets data from a different source than the app. So even when you have an app on your phone, the app is your interface, your user interface, your UI. And then behind that is the data that is being pulled into your app. And so the way that Nostr works is similar, that you have an app. I don't think they're going to do apps. I think they want to do everything web-based to make it more decentralized. But anyway, it's still a web app. It's the same thing. And it gets this decentralized data from a relay. So like the data is out there. This is the part I don't understand yet, is that the data is out there independent of which app is using that data. And it can forward it to anything. They use the term relay, but that's not a very good description. I'd like to go a little deeper into that and understand it. But the point is that apps are being built on top of Bitcoin.
Yeah. Well, I'm gonna look into that, and hopefully next time we can talk about it more. It's very interesting, and that was kind of my understanding of it too, is that it is fully decentralized, or highly decentralized, and that I did understand that you don't have everything sitting on your phone. If you're using your phone, it would be on a browser most likely, but whatever data is up there, you pull it in from points anywhere on the network, where it doesn't have to go through any central hub, and you're using a private key to basically prove your identity on that platform.
Yeah, I think that if we dig a little deeper here, we're going to be pretty amazed by what's here. I mean, you have the potential for creating a Twitter-like social media app that's completely decentralized, right? Let's assume that that's correct. So what does that mean? Like, there's no moderators, there's nothing. It's just like completely wide open.
I guess so. I mean, I'm
sure there's some kind of filter, but then again, everyone on the network is known.
Right.
It's not a good way to be anonymous on. I mean, in some ways,
it's pseudonymous.
Yeah,
right.
Yeah, but I'm saying like there's some kind of. Well, we'll see. Everyone will always have a way. I mean, I just went to a website and it gave me this private key, and it gave me a wallet, and it gave me a public key, and I saved all that information. And to upload a picture, you had to go to like Imager or some other image website to put your profile picture on there. And
Mm-hmm.
I didn't. That's kind of where it stopped me. I didn't have a quick way of just popping that in there. So, but when we talk about apps that are built on Bitcoin, I think it's also importantly mentioned here as we're kind of doing this. I guess this episode is really kind of turned into just state of Bitcoin. Where are we right now?
Yeah.
And I think it's been great. The Lightning Network and the way that it's functioning and the way I'm seeing more people scanning to pay. So
Mm-hmm.
I guess let me rephrase that. Well, there are two different thoughts there. The first thought I have is that I'm going to more places now where it's scan to pay. So I went to a train show of all places last weekend, and they had these little vendors. And the vendors, if you want to pay the vendor, they have a QR code. You scan the QR code. Now it's clunky. It dials you into like Cash App or Venmo. It's just their quick way into those apps. But the point is, and I also went to a baseball card show, and they had a similar thing from these like independent vendors, right? The idea is that if you go to a baseball card show and you see on the counter a QR code for pay, which is pay, and a QR code, people understand what that is.
Right.
People know how to
So
function with that already.
yeah, and my comment was going to be that I think you could say that the resistance to adopt a lot of new technology has to do with like a lack of muscle memory, if you will, meaning that
Agreed.
it's like
Mm-hmm.
you don't know, if if you were to go somewhere, I don't know, say 5 years ago, and you were to go check out at a store, or say you went to, you took your kid to a model train show and you wanted to buy him a Thomas the Tank Engine, you go and you say, okay, how much do I owe you? And the guy handed you a QR code. You would have looked at him like, what is this?
Right.
And
Yeah.
what am I doing here? And so to go from that to now, it's time to pay, and someone hands you a QR code, and you say, okay, well, now I open up my phone, I take a picture of that QR code, and it's gonna, even if it launches Venmo, it's still a familiar process that it's not foreign to most people at this point. So I think the ability to do that, and then the next natural evolution of something, of Lightning for payments like that it's not going to be a static QR code. It's going to be that person's going to hold up their phone with a QR code, and you're going to scan that, and you're going to automatically pay the exact amount that you owe, and it's going to settle instantly over Lightning. And that, I think, but the leap from, having a QR code to be able to pay for something to paying with Lightning is much shorter now than it was not that long ago.
Agreed. And I think that what a lot of these vendors will find out is that accepting Lightning is easier than accepting Venmo.
Right. And
because it is.
And for most of these, sometimes they can get away with it not being a business account, but pretty much if you're doing business on Venmo or Cash App or any of those, you're going to pay fees, or you're going to pay credit card fees. So if you can settle over Lightning basically for free and instantly and final, that, I think that's attractive to a lot of merchants, because there is a huge economy around smaller transactions and, going to, you said, train shows or baseball card shows or, whatever type of retail that may not be a big box retail. It could be a neighborhood retailer. It could be a local coffee shop, whatever. All of those that is a significant transaction volume in our economy. And so the ability to shift to that is really not that, it's not that big of a leap.
No, I also think you could possibly have like almost like a Lightning wallet app, almost like exactly like a Venmo, right?
Yeah.
But it's 100% Lightning. So it's like if you want to, if you have a balance in your Lightning wallet, you can use your balance, or it connects to your bank account instantly. You could pay someone from your bank account to Lightning, to their Lightning.
Yeah. I mean, Strike does that to some extent.
Agreed. Mm-hmm. But my big point here is that people are already using barcodes.
Mm-hmm.
And if people can use barcodes, people can use Lightning. The UI is the same.
Yep. All right. Well, do you want to talk about any of the news? We can
Yeah,
run through
sure.
it
Why not?
quickly.
Yeah, why not?
Um, all right. Well, the first one is El Salvador. This a widely underreported story.
Maybe the most telling thing about the story is how underreported it was. So I found one article in English, um, which had a kind of a funny headline to it. It says El Salvador says it has repaid $800 million bond maturing January. Not El Salvador has repaid, but El Salvador says it has repaid. Well,
Mm-hmm.
I mean, you're a journalist. I mean, and then the funny part, right? The funny part is that the opening of the article says El Salvador has repaid an $800 million bond.
Mm.
So in the headline, I mean, if you're just a headline writer, the headline really should be El Salvador's repaid an $800 million bond because that's how your article starts.
Yeah. Interesting.
But they had to throw something in there just to make it couldn't be neutral, couldn't just be factual. It had to have a editorial slant to it.
Right.
And we found an article that Nayib Bukele tweeted out that was in Spanish. We had it translated. That was he talked about the fact that it was only one newspaper, and I think that the question would be if El Salvador defaulted on this bond, how many articles would there be?
Yeah, there would be a ton of articles, and it would be it would actually have I think it would have a significant effect on the Bitcoin market.
Yeah, I don't know. I haven't thought through the effect on the Bitcoin market, but it wouldn't be good, and it would be. I would say that it would be a big like ha ha moment to the people that dislike Bitcoin. Like look what happened here. But
Yeah.
you don't need to have the articles for something to be a reality. And you can also glean a lot from the lack of coverage, meaning this is not something that the people who control the narrative or whatever the narrative would be. I don't even know. I think people understand what I'm talking about. Like, it says a lot that no one in the media is. I mean, isn't this a good news story?
It's a great news story, and I think one of the things that's really interesting is that this bond was actually downgraded in September, and and it was downgraded. I actually looked at what the gradings mean because I don't really know a whole lot about bond grading, but it was what they called a CC rating, which means that it's highly vulnerable to non-payment.
Mm-hmm. I read that.
And it got downgraded to CCC. And let me make sure I got that right. But basically, it got downgraded to the point to where they said it. There's a it went down to CC. CC means that there's a current high vulnerability to non-payment, whereas triple C just means that there's a vulnerability, not a high vulnerability. So basically, they said there's a really good chance this thing's not getting paid. That was as recently as September. And then what El Salvador did was they turned around and paid off the 800 million plus interest that was due on this bond, and now they've got no maturities on their bonds until I believe 2025. So they got a couple more years to worry about it.
So they still have some IMF bonds to pay off?
They had, I think there was another 300 and something million. Let me see if I can find that. But yeah, I think I read an article that said they paid 800 plus interest and they still owe like 367 million plus interest in 2025. So half of what they owe now plus interest, but they made a big dent in it. That's for sure. And they made the payment on time, which was, doubtful according to the bond raters.
Right. So it's certainly a big story.
Yeah.
And maybe the story within the story is just the lack of press on it.
Right. Well, or the fact that they took a good news story and made it either a non-story or in some ways, you know, you could view it as a negative story. They're like, oh, well, this bond was really poorly rated. Oh, and by the way, it got paid off.
Mm-hmm.
So it's definitely an interesting slant to it. That I agree with you would have been much more amplified if it had gone in the other direction.
For sure.
All right, let's go to the next one. Bitcoin mining going to be using nuclear power this quarter in Pennsylvania, I believe. So I thought that was a really significant story in terms of talking about using renewable, efficient, cheap energy to power Bitcoin miners. Well, doesn't really get much cheaper and efficient than nuclear.
Mm-hmm. And this is something that I guess we could put in the. I don't think we were the first. We were definitely not the first ones to say this, but I think we were very early talking about this concept of all these power providers using Bitcoin to stabilize their network and make themselves more profitable. Right? There are a lot of advantages for power companies to have Bitcoin mining in-house. And this is something that I think we said on one of the earlier shows, that it would almost be negligent that if you were a power company or a power provider, that you weren't having Bitcoin mining there.
Yeah, I think I think was it last week or the week before, there was some bad winter weather in Texas, and you had situations where Bitcoin miners powered down, and it actually worked. It helped to avoid having to have any rolling blackouts or exceeding peak demand on the power plants. I mean, it's pretty incredible.
Yeah, and I'd like to reiterate how that system works, because I think a lot of people don't understand this, and it's worth mentioning because it's really neat if you look at the real world implications that happen in Texas.
Yeah.
So if you run, let's say, a nuclear a 2.5, this is a 2.5 gigawatt nuclear power station. You can't just turn up and turn down the nuclear reactor like you would a thermostat or volume on your TV. It doesn't work like that. And so what the energy companies try and do is they try and guess how much power to generate at different times.
Mm-hmm.
And they don't want to guess too little, because if they guess too little, then they're going to have blackouts and rolling blackouts, and it's terrible. It's like they don't like to err on the side of too little. And we should give the energy providers a lot of credit in the United States, because we don't really have that very often.
Yeah.
Right. And so they try to have they definitely err on the side of having too much output, because that's what you need as an energy company. If you keep having blackouts, people are going to go crazy, and they're going to demand that you turn up the dial anyway. Right?
Yeah. I mean, yeah, you have to plan your power generation
Right.
based on the peak demand, not on your average demand.
Right. But I'm saying that they have to, if they're making an estimate, if they think they need 2 gigawatts, it's probably best to go to 2.1 gigawatts just to be sure.
Yeah.
Right. Add a little something on top just for some margin of error. And so what happens is that because the power supply companies have to make sure that they can meet demand, a lot of energy gets wasted in the form of heat.
Mm-hmm.
When they make the power, they also can't store the power. It's another important concept. It's not like they're making T-shirts and they said, well, we made 100 T-shirts today. We only sold 75 T-shirts today. That's okay. We can just take these extra 25 T-shirts and we can sell them tomorrow, or we can add them onto tomorrow's inventory. It doesn't work like that with electricity. You basically have to use it or lose it. There's some storage, but it's not much.
Yeah, and the ROI on storage is non-existent, meaning that it's not worth it to build the capacity to store the electricity, because you'll never make your money back on it.
Exactly. And so they have this extra power. So ideally, you would have an entity. If you could design a perfect entity, if you're a power company, you would say, okay, here's what I want from this entity. I would like an entity that can take my unused power that we're losing in heat and getting exactly $0 for, and maybe there's a cost to cooling it. I don't even know, right? And I'd like to turn that power into money. That would be great if we could have something like that. And here's the kicker. I don't just want it to convert the excess power into money. I want to be able to shut it down whenever I want in order to provide capacity to my customers. So meaning I don't want a customer that has to manufacture like potato chips because they have to run their potato chip plant.
Yeah.
And even if you say, well, I want to run computers, well, Google doesn't want you shutting down their servers if you have a power shortage, right?
Sure.
So it's like the perfect computer or perfect setup for a power company where they can turn that wasted energy into money, and they can have these machines that help stabilize their network. And so when you have the situation that happened in Texas, they shut down the miners.
Yep.
And there was the network that would have had a lack of energy now had the energy it needed because those miners were there to help build a higher average level output.
Right. And you've got this kind of symbiotic relationship because what happens is the power company has just created a new revenue stream by bringing these miners on board and selling them extra energy. But the miners have to be profitable and they know at what price they're not profitable. So really all the energy companies, it's not even as, and they do have contracts and that state, when and how they can tell them to power down, but it's really just a supply and demand function, which is that, okay, you can keep buying this energy, but it's going to cost you 3 times what you're paying for it now because we got somebody over here who needs it and they're willing to pay at least that. And so there's no reason a miner would never say, okay, I'll pay the higher price because, they're not, it's not like they're, wildly profitable. They have to watch the cost of their power in order to remain profitable. So as the price of that energy goes up, it's in their interest to power down. It doesn't only help the power company, it helps the miners continue to run a profitable operation.
Mm-hmm. And I want to be clear because I think we're talking about I think you described the situation with having like an external miner buy your energy, which is what we have in Texas.
Mm-hmm.
And but we have this story here, which I was thinking through that one more, which is that the energy providers themselves would host the miners.
Well, yeah, and I think that's a function of time, meaning that
Exactly.
right now you've got these large mining companies that are serving that function. I think over time, especially as if power companies have these revenue streams that allow them to invest, then I could see that would be a logical next step. Is like this is like an outsourcing decision almost,
Mm-hmm.
or not almost. It is an outsourcing decision. Well,
Exactly.
I can pay Marathon or Riot Blockchain to take away my excess power, or I can take the money that I'm making by selling it to them and now buy my own mining equipment and do it myself and cut them out. And so I think you'll see some of that happen over time.
I think you'll see both, but
Yeah.
this this data center that's going to be connected to it's a 2.5 gigawatt nuclear power
Mm-hmm.
station. It's a 48 megawatt, 300,000 square foot data center.
Hmm.
So that's a lot of Bitcoin miners in
Yeah.
300,000 square feet.
Well, I think if I read, it's not all Bitcoin mining that's going to be going on there. I think that it will be a big chunk of it, but it is a data center that's going to actually host
Okay,
other computing services.
that would make sense. That would
Yeah.
make sense.
Yeah.
Right. Another good idea. I'm surprised we don't see more of that. Surprised we don't see more mining facilities located next to power suppliers.
Mhm.
Well, I guess because for some of that they can't turn it off, right? If you're going to host regular data center, you can't turn off the machines.
Right. Right. The cloud. Yeah. If you're on there hosting your own cloud servers or whatever, you're not doing the same thing as a Bitcoin miner in that same space. But I think it's just a big warehouse full of computers. So
Mm. But progress, it's the
yeah.
first, and it's something we had discussed before, and it's something that this is just the first one to do it. Then there'll be two, then there'll be four, because this is so obvious. Even someone like me that knows nothing about this business can see how obvious the solution is.
Yep. All right, let's go to the next one. So Grayscale. Grayscale's been an interesting one. They were denied their application to convert to a spot ETF, and they turned around and sued the SEC. And so now there's going to be a court date. I believe March 7th is going to be the date where they actually have oral arguments in court regarding this matter. But this is an interesting one, I think, because Grayscale is one of those. It was like the first fund that gave retail investors exposure to Bitcoin without actually owning Bitcoin. But it's traded at a fairly significant discount to Bitcoin, which I think that discount keeps getting deeper and deeper. I think last I saw was at like a 40% discount.
I think it's recovered a little bit from there.
So yeah, it probably has recovered some
30%.
with the run up, but whatever. It's still significantly, the value of the fund is less than the value of the underlying Bitcoin, which part of that is because it's kind of difficult to get out of it. There's no real mechanism for the fund, for the trust actually to be able to liquidate any Bitcoin for people to get out. So the easiest way to do that would be to convert to a spot ETF, and that was denied. So I think there's a lot of overall Bitcoin market cap kind of locked up in this problem. What do you think?
I don't know. I'm a bit cynical. I just think that the idea that you can't have a Bitcoin spot ETF has been the desire of Wall Street to not have it there.
Yeah, because it makes it more difficult to keep the price suppressed.
Right. And that's obvious. I mean,
Yeah.
I'm not like a big anti-Wall Street guy. I'm just saying that if Wall Street wanted a spot ETF for Bitcoin, they would have it. They would simply make sure that the politicians were supported in the right way, and it just wouldn't even be a question. So this is something Wall Street doesn't want, in my opinion.
Mm-hmm.
And I would say that there are probably some on Wall Street that do, but in general, the Wall Street world doesn't want it.
Yeah.
They just don't. And so, and the SEC. This is where I'm a bit cynical. The SEC is arguably controlled by Wall Street. Like there are ties with them together. They're not in Wall Street, and the SEC are not in an adversarial position. There are times where certain companies don't do what's right. The SEC will go after them, but the people that run the SEC are politicians, and so
Yep.
it's a world of
They're politicians, many of whom came from Wall Street. So yeah.
Right. And so, do I really expect, like, is it, what are the odds of this judicial decision being based on facts, reason, logic, and the law?
Yeah. Well,
I don't know. If it was, I'd be very optimistic.
yeah.
But I'm not particularly optimistic because, I've just seen this movie before.
Yeah.
So we'll see. I think I will say this, that you never know. You never know what's going to happen. I will be surprised, and I'll be pleasantly surprised if this goes through. I think it would be a monster catalyst for Bitcoin. Yeah. Monster. I think it's and then, okay, here's another, if we're going to get into just sort of these just theories or ideas. What if? Here's a weird what if. what if people on Wall Street already know what's happening? What if people on Wall Street want this to happen? And like I said, I'm going to say again, this is just a what if. I'm just having a hypothetical discussion. Sometimes you never know where it goes. But what if there's already let's just say the fix is in. Let's just say the whole system is as corrupt as many people think it is, and that the people on Wall Street have said they've told the SEC, like, listen, we had to do what we had to do to Bitcoin. There were some things that need to be done. We had to bring the price back. We loaded up. We knew that this thing was there. We're ready for you to unleash it now. And you can be the kind of like, you can keep your adversarial position here, right? Like, no, we're the SEC, we did our thing. And a judge is going to rule that it's legal. And the people on Wall Street now, the institutional investors have done their sort of, maybe they've moved it from 16.5 to 23 during this period, right? Trying to acquire, knowing that this is coming. Maybe, I don't know. Weirder things have happened.
Sure.
Right. So, and so maybe they have this case and they're like, okay, after this case, we know Bitcoin's going to go on a crazy run. It's wishful thinking maybe, but it is it does have above a 0% chance of happening.
Yeah, it's non-zero for sure. All right, this one, I like this one. Speaking of Wall Street. So if anybody was paying attention to what was going on in Davos last week, it was the usual par for the course, at least,
it was comical.
Yeah.
We can't play a clip on here. The clip was pretty funny. I mean, it was like he did everything he possibly could to not talk about Bitcoin.
So, right. He didn't like that they asked him about Bitcoin. And so he called it a hyped up fraud. He called it, but actually, that, people calling it a Ponzi scheme or a fraud or a fad or a pet rock, all of that kind of stuff. Like, okay, that has zero impact on me. The second part of the sentence is really what I think is worth talking about, which is that Jamie Dimon, the CEO of one of the largest banks in the world, came out and said that he doesn't trust Bitcoin's monetary policy and that he expects that at some point Satoshi will just change the 21 million to some other number that's bigger than 21 million. Mm-hmm. And if you understand Bitcoin, even on a fairly superficial level, you realize that it's just utter nonsense.
It's not intended for an audience that knows anything.
Right. So, because to suggest that you can just arbitrarily change the cap, or that if Satoshi were to, reappear, that's what they would do. Their first order of business after being gone since disappearing, over a decade ago, their first act would be to devalue the thing that they created. So first of all, let's start there. Second of all, math. I mean, that's really, the code is open source. There is an equation. You can make it in an Excel spreadsheet in about a minute if you know how to use Excel. That will show you what 21 million coins looks like, and the fact that because of math, there will only ever be 21 million Bitcoins. And in order for that to change, pretty much everyone that's using Bitcoin today and that owns Bitcoin today would have to agree to that in order for it to change. And so, and I'm probably saying a lot of things that a lot of people listening know if they're already into Bitcoin. It's not, the 21 million cap is not really in question. But what I find really interesting is that I can't believe for a second that Jamie Dimon doesn't know that.
There are only two possibilities, right? It's binary. Either Jamie Dimon understand. Well, at its highest level, it's pretty much binary. Either Jamie Dimon understands Bitcoin, or he doesn't. And I'm not going to say, when I say either Jamie Dimon understands Bitcoin, I'm not going to say that he's put 1,000 hours of study into it and he's thought it through and he's kind of pondered on it and listened to podcasts. I don't mean that. I mean that Jamie Dimon runs one of the largest banks in the entire world. Is J.P. Morgan second, third
I
biggest
mean, they're
bank in the
right
world?
there. They're right
It's
there. At
basically
that point, it doesn't matter.
It's basically bigger than most people can comprehend. Okay, he is. It may say J.P. Morgan CEO Jamie Dimon, but Jamie Dimon is arguably one of the 20 most powerful people in the world. Would you agree? I mean, he's in a club at the top 50. It doesn't really matter. I mean, he's a really
I'll put this into perspective. Okay, J.P. Morgan. When you look at the largest banks in the world by total assets, J.P. Morgan is number 5. Okay, 1 through 4 are all Chinese banks.
Okay, so it's the largest American bank. Okay,
largest American bank and the largest bank in the world outside of China.
Largest bank in the world outside of China. Okay, so
which, by the way, there's not 10,000 banks in China like we have here.
Right,
There's a handful.
So Jamie Dimon, if he does not understand Bitcoin, and we talked about some things earlier about what is Bitcoin. Well, it's the best, most powerful, most reliable monetary network in the world. That is a thing. There are hundreds of thousands of computers that are running this network in a decentralized way. It's something really extraordinary in the world of technology, especially since it has no employees and doesn't have a chief technology officer or anything like that. It's really quite insane.
Yeah.
Right? How reliable and robust this network is. And no one's ever hacked it. JP Morgan's been hacked all the time. JP Morgan has been hacked. They don't talk about it, but JP Morgan, If you wanted to hack it, you could hack it. I couldn't. You could. but there are people that do it. I have a cousin. That's what they get hired to do. They get hired to hack into banks by the banks. The banks say, find the vulnerabilities.
Yep.
And they said there is no 100%. There's no 100%. So no bank cannot be penetrated. But Bitcoin is looking pretty close to that right now. We'll see. But so either Jamie Dimon understands in the world of money that Bitcoin is the best monetary network in the world for a number of reasons. And we can get into all those plus the supply and demand. I mean, either he's this guy that understands that, and he should understand gold. So if he understands gold, he should understand Bitcoin, right? Or he doesn't. And if he doesn't, then what is he doing running JP Morgan? That's because even if he didn't, there are people at JP Morgan, I guarantee you, there are people at JP Morgan that really, really understand Bitcoin. For all I know, they might hire people to just study Bitcoin all day. Your job is to listen to, these, 8 to 10 hours in a workday, and you're going to listen to 10 hours of podcasts each day.
Well,
and write reports on it.
We have a friend who's taken some Bitcoin development courses who, the first time he took the course, it was all coders. And the last time he took the course, it was a lot of JP Morgan Chase employees,
Yep.
So,
so they're and correct me if I'm wrong. Didn't JP Morgan once sent a letter out to their top people saying that they think Bitcoin could go to 600,000 a coin?
Was that JP or Goldman Sachs? I think that was
maybe Goldman Sachs. Okay.
But
okay. So Jamie Dimon didn't get that memo, right? So, and we did hear about that they were having coders. So they're not just having people, and that was a pretty intense coding class. That was not Bitcoin coding 101. That was
advanced.
That was very, very advanced. So, of course they understand it. Of course they understand. Of course he understands it. I refuse to believe that Jamie Dimon doesn't have a good grasp on it, and I kind of have proof of that too. So I watched that, and he said, would you put that slide up again? It's a hyped up fraud, right?
Yeah.
He said it was a hyped up fraud, But you know what he didn't say after that? He didn't give a reason why. He didn't say it's a hyped up fraud because whatever his because was.
Mm-hmm.
He was like, it's a hyped up fraud. Well, if that, if you were taking a test, what kind of grade would you get for that answer? Right? That's
Yeah.
you're not getting any points for that answer. I mean, there are people that that like to say that Ringo Starr is not a great drummer for the Beatles, right? The Beatles are amazing. these three amazing guys, George Harrison, Paul McCartney, John Lennon, and then and Ringo. And there was kind of this running joke for, Ringo. But anyone that knows anything about music and drums knows that Ringo Starr is an amazing drummer, like a genius, super genius, right?
Yeah.
And by the way, if anyone doesn't believe it, there's a really interesting video on YouTube where they try and like challenge drummers to play that song "Act Naturally,"
Mm-hmm.
and they just ask the people just to play that song, but he used to play the song and sing it, and it's just got this really unusual time sequence with like the swing to it, and people just can't play that song for 2 minutes the right way. So, but the point is that a lot of people are like, oh, Ringo is a terrible drummer. Well, if you don't explain it and you don't give a reason why, then it's just like anyone can say anything. Like, oh, Tom Brady, he's not that good. Right?
Yeah.
Anyone can just throw that out. And that's just kind of what he said. When you don't back it up with anything. So these are reporters. They're asking you a question. And you would think that if someone asked you something about Bitcoin, that you would have a quick response of why Bitcoin is not good. And what this proves to me is that they don't have, and he doesn't have a good response for why Bitcoin is not good. He can't say you can't trust it.
Right.
Can't say it's not reliable. Can't say it's a scam, right? He didn't have anything to say, so he's like, it's just a hyped up fraud, and then nothing after that. So, and I think that was telling, and also the part about they can also change the code. You mean to tell me that Jamie Dimon, CEO for many years of JP Morgan, doesn't know that the code for Bitcoin is open source? Really?
Yeah.
Sure. Yeah. So, but a lot of people in that audience are not going to really digest it. And once again, it's just like, he wants to try and convince the general public that Bitcoin is garbage.
Yeah. I think that's probably
Clearly.
right. All right. Well, let's go to this last one. This is less of a story, or just kind of a thing that happened that was kind of going around Twitter a couple weeks ago. But I thought this was a good opportunity to talk a little bit about Bitcoin butlers and how we view kind of best practices as it relates to custody. So here's what happened, as I understand it. And again, this is just kind of from reading what I read on Twitter from the guy who says he lost the coins. I've listened to a couple podcasts where they mentioned it. And so, this is not, I'm just kind of, this is my disclaimer that this is somewhat alleged, somewhat hypothetical, but kind of makes sense as to what could have happened. So there's this developer, Luke Dash Jr., who is a fairly well-known, highly respected Bitcoin Core developer, who came out and said that he had over about 200 Bitcoins that were stolen in a hack. And it was because his PGP key was compromised. Now, PGP is a way to encrypt the private key of a Bitcoin wallet. And think of it, if you're at all technical or you care, PGP was, before you had seed phrases and deterministic wallets. You basically had a private key, and that private key could generate public keys. And you wanted to keep that key secure. Today, the way you would back up that key would be to write down a seed phrase and have that kept somewhere safe as a backup. Well, when this wallet was set up, that wasn't a possibility. It was just that you had a private key, and then he used an encryption protocol, which is a well-known protocol called PGP, that to take that private key and make it to where if somebody were to see that private key, the data would be useless to them. They wouldn't be able to do anything with it. And what happened apparently was that it seems like maybe two different servers were hacked. So one server was hacked that had the encrypted data, and then something else was hacked that had the decryption key to turn that encrypted data into a private key. And then when the hacker got that private key, they swept the coins out of that wallet. I also read some tweets that they were immediately put into some CoinJoin transactions. So they were made. So what they did see very quickly was very difficult to see because of the coin joining. So look, this is another sad story of somebody losing their Bitcoin one way or another. We know that it happens for different reasons. But the kind of the point that I wanted to make here about this is that, number one, don't use this. I don't view this story as a reason to consider keeping your coin on an exchange as a better form of storage. I wouldn't look at it and say, hey, this is a Bitcoin developer. This guy knows what he's doing. He's well respected. He's smart, and he held his own keys and got his coin stolen. I think that's kind of a false way to look at it, because first of all, I would argue that he was using old technology, and on top of that, he had to at some point have violated, what I would consider some basic standards for holding your own keys, which is, first of all, if you've got the decryption key stored on a computer that is in any way connected to the internet, then you've just, whether it's a C phrase or a decryption key, it's the same type of information. And so, at some point he allowed that to get compromised by not properly storing it. So that's one thing. But the other point is that this stuff can be complicated, and you have to have some guidance, unless you're an expert in this, or unless you're a technologist that can do all of this. Coming up with a way to store your Bitcoin by holding your own keys is something that you should take seriously, and it's something that you should do that needs to be updated. Like, if he had switched from this PGP encryption to a seed phrase that was backed up and held in a safe instead of on a computer, maybe he wouldn't be in this situation. Or if he had moved it into a multi-sig setup where just one of those keys didn't do anything for the attacker, and they didn't know how to get to one of the other any of the other keys required, then he might have prevented that. So the point here, and tying it into what we do, is that we want to help people come up with a self-custody plan that not only meets the requirements of good self-custody, but is also maintained over time, so that as things change and as we get better solutions on how to hold our Bitcoin, that we're constantly, embracing those new ways of doing things, and that we're able to tell our customers and the public, hey, here's what we think are the best practices on how to do it. Currently, we think that a multi-sig wallet is the best practice for storing your Bitcoin. It takes some discipline, it takes some setup, it takes some knowledge to do it, and that's why we're here to help people do that. But this is a good example of a highly proficient technologist who didn't embrace best practices. Maybe they were best practices at the time he was doing them, but fast forward 10 years later, or I think the seed phrases came about around maybe like 7 years ago, somewhere around that, 2015, 2017, somewhere in there. So it hadn't been updated since then. So you got to keep on top of it and make sure that as better solutions come along, you're leveraging those to keep your assets safe.
Yeah, I mean, it shouldn't have happened. It didn't need to happen. What you said is accurate. That it it was old technology in one way you look at it, but it was also not a best practice, regardless if the discussion of the technology was just not a best practice. And with the multi-sig solutions, just to name two, which is Casa and Unchained, with those being available in the marketplace, and with the really low fees of some of their entry level packages, I think that the cheapest multi-sig setup for Casa is $10 a month,
hmm
and I think Unchained, they have like an initial setup fee, and then they don't have yearly
Well, it
fees.
depends
So
what you're doing.
what plans you on?
Unchained is if you're just holding your coins in a multi-sig vault, that's free.
Right.
It just costs you the cost of the hardware devices.
Mm-hmm.
If you want to use their IRA product, then
Sure.
there is a fee to do
Sure.
that. Which that IRA product is interesting as well. If you have Bitcoin or you want to hold Bitcoin in your IRA, that's a good way to do it. But yeah, both of those solutions, a Casa Gold account for $120 a year or an Unchained vault that's essentially free, is a really user friendly solution and a great way to ward off a high percentage of the situations that would cause you to lose your coins.
Mm-hmm. And do we know when the guy, like, how often was he checking with his PGP key? Like, when was the last time he checked? Maybe he hadn't checked in 5 years, 7 years.
That I don't know.
Right. So it's
No.
like, hey, I went back to it 7 years later and it's gone.
Well, you would think that. I mean,
Stranger things have happened.
yeah. I mean, it was 200 Bitcoin.
Just
So,
saying.
Yeah, I don't know. I don't know how often he was checking it. I know.
So, a lot of really smart people can be pretty irresponsible, and I don't mean. I mean, like they don't always have the best common sense, right? And he just wasn't thinking through something. So I could see like I don't know, have this like thing in my head of like a engineer at Tesla who, it's like super hot out and he's wearing like a parka, comes in or like has no concept of like what summer and what the weather is, just
Yeah.
but he can design a rocket that lands itself, right?
Yeah.
Like something has to give. So I just don't know if this guy is just like, maybe super brilliant developer, but he just, when it comes to like, he's always like locking his keys in his car, you don't know who he is, right? But
Yeah.
what we do know is that we can, if we have an opportunity here to learn what not to do, it's another good example.
Yeah.
And I would direct people towards Casa and Unchained solutions,
Yeah.
as well as looking at other multi.
Well, and the other thing that's also critical, in my opinion, is you also have to run your own node. And so that's another piece of it, is that, running your own node allows you to see what's sitting in all of your addresses without having to rely on anyone else's server to do it.
Yeah, it's pretty amazing. The watch only wallets are pretty amazing.
Well, good. What else you got?
That was long.
Yeah,
That's I think that's enough.
I agree.
But I do think it was. It's really been the first time in a while that I've really thought about it. And I thought that we had a very interesting discussion.
I enjoyed it. I think we need to continue on. It's good to take a break, come back and have a lot to talk about.
Double album.
Right. Box set coming up. So, all right. Well, I'll let everybody know where they can find us. You can come to our website, btcbutlers.com. Our Twitter handle at BTC Butlers. DMs are open. You can email us at info@btcbutlers.com. You can leave comments on YouTube. Like Michael said in the beginning, if you enjoyed it, please like, share, subscribe, tell your friends. And if we can help you with any of the best practices for Bitcoin owners, whether that's buying Bitcoin, storing your Bitcoin, setting up an inheritance plan for your Bitcoin, running your own node, and keeping everything up to date. We're here and happy to help you do any or all of those things. You can check out our best practices guide, which I think is probably about due for an update. So we're going to work on that and get that out soon. And you can also check out our sovereign inheritance planning guide that gives you a roadmap on how to secure your digital assets and non-digital assets, so that your heirs can get them when the time comes. So with that, I will sign off, and thanks.
Thank you, Matt.
Bye.